Good evening, everyone. This is Ajit Mishra from Religare Research, and we are going to start in a few seconds. All right, let's get started now. Talking about markets, obviously, markets have been doing great. So, we're going to talk about those things in detail. But before that, like in the format of this webinar, this week ahead with Religare Technicals. So, in which we cover the performance of the market. We just give a brief about how the market performed this week and what all sectors and stocks did well and wherein we saw underperformance. And in the following slides, we're going to talk about both Nifty and banking index in detail, like what all levels that we might see in the coming week, and then followed by few stocks which should be on your radar for the next week, both for the long and short opportunity. And after the webinar, we'll conduct a quick poll followed by the Q&A session. So before we talk about markets, a quick disclaimer that the recommendation or the insight that we are sharing during this webinar are more of like insights. So it's not recommendations, more of insights that we are sharing, our observations. So please take help from the financial advisor and use your own discretion before making any investment or trading decision. All right, so markets for the fourth successive week ended higher, close to around 2%. Both Nifty and Sensex gained, and metals from the sectoral pack, banking index that remains the continued performer. Then energy, financial services, and reality, they were the one actually who contributed to the gains. At the same time, the defensives like FMCG, pharma, IT, media, they were slightly on the back foot and ended marginally lower to almost on the flat note. And similarly, in the replication of the sectoral performance, metal stocks did well. Hindalco gained nearly 8%, Tata Steel roughly around 5%. Then we have Coal India also, which gained around 7%. And from the banking pack, it was ICICI, which is trading at the record highs, ended gain with around 5%. And UPL also falls from the Nifty 50 basket. But at the same time, Davis Lab, Ultratech, Tata Consumers, Adani Ports, Hindi Unilever. So again, from the defensive pack and selectively from the other sectors, we saw the underperformance, wherein the stock retraced roughly around 5 to 2%. Now, what is expected for the next week in both Nifty and the banking index? So this is the Nifty index. Last week, we talked about it's very critical for the Nifty to hold 17,400 to inch towards 17,800. And now we are almost there. This trend line, this zone close to around 17,700 is what we are quoting. And we are again, there of this upper band of this broader consolidation range in which we have been trading since October. We are again, around that zone. So what next for the Nifty? So, considering the past instances like this, wherein we saw a very sharp decline, after retesting this zone, and similarly in this occasion, this time around conditions are slightly better. I would say for multiple reasons, because almost all the sectors are contributing to the move. Earlier, it was very handful of participation, which we used to see in these rebounds. And the global markets were also not very conducive. So, but now both the factors are in the favor that we might make an attempt next week to reclaim this zone above 17,800 mark and inch toward the next pivot, which is closer to around 18,100. So, but yeah, before that, there could be some consolidation, and that is what we are seeing from the last two trading sessions. So yesterday it was an up day. Today also Nifty ended slightly on the positive side, but largely it's more of a consolidation that we are seeing around this area. So it's healthy as long as we are not seeing any major price correction. So as long as we are holding up this level of around 17,450 to 150 zone, this positive bias is there to stay. So the idea is when we are seeing this consolidation continuing in the market, the focus should be more on sector specific opportunities and the stock specific opportunities. And once we see a breakout, obviously the performance means the preference should be given to the performers, like banking, financials, stocks from the auto, IT. So it's rather looking for the underperformers doing well. The idea is to stick with the performers because that is where we'll continue to see the buying interest coming in. So for the index, for the Nifty, 17,800 is something that is critical, and you know the reason why, because we have this major hurdle of upper band of this consolidation range, which is around the 17,800 mark, and above that 18,100 is what we are eyeing in the short term. Next comes the banking index, which is fueling the momentum rather, and helping the index to inch higher with every passing week. So interestingly, the banking index have already surpassed this previous swing high closer to around 3,800 last time when we talked about this level. That 3,800 is going to be a critical resistance area, and Bank Nifty surpassed that level with very strong gap, though candles are not very decisive. Means the price move is not very decisive, but it's understandably so, because you can see the kind of surge that we have seen. It's almost vertical. So people are a bit of spectacle whether we are going to sustain this move or not, but at the same time the bulls are still in the control. That's why we are seeing the positive closing. So in such a scenario wherein the outperformance is continuing, we should not bother much about what could go wrong. The idea is you can manage your risk. That is something that you should focus on, instead of other aspect, in what if the market corrects and other things around it. So as long as we are holding this positivity, this buoyancy in the banking index, there's no reason to worry. And as you said that this is one of the critical factor that why we are anticipating the Nifty to cross 17,800 this time, because all the sectors are contributing, and banking and financial, which hold considerable weight in the index, is leading from the front. So for the banking index, this zone close to around 39,500 would be the next resistance area, and then this next hurdle close to around 40,200. In case if there'll be any profit taking in the banking index, which would be healthy. So close to around 38,600 to 38,100 means this gap and somewhere around this. So this zone should act as a support area, when it comes to any bit of profit taking in case if it comes next week. So again, here earlier it was a private banking majors which were leading from the front, while the PSUs were trading lackluster. But this time around, we are seeing equal participation, and the traction is equally strong, but in a selective PSUs name. So we can just count them on fingers, like SBI, Bank of Baroda, Canara Bank, Indian Bank. They are the one actually from the PSU basket which are doing well. Apart from the private banking space, please avoid the stocks like IOB, UCO Bank, Union Bank, in the anticipation that sooner or later they might participate. So if they're not participating now, chances of not participating in the future is equally high. So the idea is to stick with the performers, as we've said about the banking index, similarly in the Bank Nifty also. So here the bias is comparatively stronger because we don't have any major hurdle to cross, unlike what we have in the index. But yes, since it's also looks slightly stressed, there could be some consolidation, but the bias would remain on the positive side, and 39,500 to 40,200 is something that we are at. Now, since the bias is on the positive side, what we should look at when it comes to stock? So from the banking space, the first name comes CUV, which is City Union Bank. So you can see this major consolidation from almost a year, like this major range. This was declined in 2020. It was very sharp. It made an attempt, a multiple attempt rather, for a reversal, but it couldn't sustain. But finally, this time around, post numbers, we are seeing this consolidation ending, and that too with a very strong volumes. So we believe that this momentum would extend further, and since we are vouching more on banking index for the outperformance, so banking stock should remain on your radar. CV something that you can look at when it comes to long positions. There may be some consolidation around that area, just close around 185, 190 zone, giving respect to the previous highs. But overall, the kind of consolidation that we have seen and the kind of volume and the price action which we are seeing, it's just like a breather that we might see around this area, and then we can see this resumption of trend continuing. The bias would change in case if it breaches 160 level again. Next on the list is Deepak Nitrate. Of late in the previous webinars, people were asking about agrochemical related space counters. So Deepak Nitrate, after a very long corrective phase, you can see this declining channel. So it's now on the verge of breakout, from that range. So that shows, there could be a decent traction in the coming week in case if it manages to surpass this 2080, 2090 zone, and a level close to around 2200, 2250 could be the area basically where it might head. And the important aspect is that the recent consolidation is happening over the long-term averages. So that further adds to the conviction that there's a possibility, very strong possibility, that it's going to make an attempt for a breakout from this channel and inch toward 2250, 2300 levels in the weeks to come. So this is another stock, which one should keep on radar for the next week on the long side. Now comes the underperformers. So, and this is something which is important because though the markets are inching higher and we are not seeing any major, correction, almost all the sectors, all the, sectors are contributing to the move, but still we have certain underperformance. And just in case if the market witnesses any profit taking, though it's not happening for the last 4 weeks, still it's prudent to have few stocks which could underperform or, could be seen for fresh shorts if the market, witness any correction. So Divis is one such name from the pharma basket, and you can see on your own basically why I'm saying this. So after this consolidation, we had a very sharp dip in the stock, and it has been gradually inching higher of late, but it couldn't surpass this previous swing low, which is now acting as a resistance. And today it witnessed a very sharp decline of nearly 5%. So that clearly shows that this zone close to around 3970, 4,000 zone is not going to be easy for Divis to surpass and make a very strong attempt for up move. So in case if there'll be any further profit taking or consolidation in the market, and you wish to have few short position, Divis should be on your list. Next comes the SDFC AMC, and in this segment, wherein we talk about stock which could underperform or witness selling pressure, it's more about the underperformance instead of because the markets are doing well. So sooner or later, all the stocks witnesses some bit of traction, be it some bottom fishing or some other reasons. But the underperformance is something that is a big criteria. So in case if you're not going short in these stocks, the idea is to avoid these stocks on the long side. So similarly, SDFC AMC, we were seeing a bit of a retracement, a rebound, but it couldn't surpass this hurdle of close to around 2050, 2060 zone. And again, we are seeing a negative candle on the weekly charts. So possibility of the stock remaining in a very narrow range or in a consolidation is very high. So that's the reason why we have kept this stock in the list of underperformer for the next week. So either it's going to trade in a range, this lower band close to around this 1900 1910, or upside around 2020 2050, and in case if it reaches this level, it might inch further lower. So just to sum it up, we talk about index 17800 in the Nifty is something that you should keep a close eye on. A decisive break would help the index to inch further towards the level of around 18100. Just in case there'll be any profit taking in the market, 150 to 450 would be the area basically where we're going to find support. Banking index is outperforming, and last week also it outperformed. It is trading above the previous swing highs as well. So 39,500 to 4020, 4200 is something that we are eyeing on the higher side. But just in case if there's any profit taking, 38,600 to 38,100 would be the area where we expect the banking index to take support. On the long side, we like stock like CUB and Deepak Nitrite. They have the potential to do well for the next week as well. And in case if there be any profiting in the market, Deviz and SDFC may underperform. So yeah, that is all from this presentation. We'll have a quick poll and then we'll start with the Q&A session. So please quickly fill that poll so that we can start with the Q&A session. Komal, can we have the poll, please? See, raising hand is not an option. In case if you want to ask a question, please put that in this Q&A tab. And please make sure that your question is pertaining to the presentation, means whatever stock sectors that we have discussed in the presentation, no individual stock specific queries, please. I'll request please not to use that raise an option button. Put your question in the Q&A tab. See, I've requested not to please ask for individual stock specific questions. Mostly questions are for like individual stocks. So please excuse. There's a question on mid cap. Avyut Panse have asked for this, so yeah, that I'll surely answer. See, the mid cap index, in line with what we are seeing in the market, has been doing well, and 30,800 is something that's currently quoting Nifty mid cap index, and this index has a potential to inch toward the level of around 31,500. So that roughly comes to around 700 points of gains, which is still left for the next resistance. So, but again, I would recommend that in line with what we were discussing during the presentation for the Nifty 50 counters, the idea is to stick with the performers. So in the mid cap space also, stocks which are already doing well, which are trading in line with the market, should be preferred, like instead of like focusing on the underperformers. So yes, we still have potential, and comparatively, the small cap index is not doing well. So small cap index, just to give you a reference, that we have hardly seen any major rebound, because the small cap index in the month of June was close to around 7,900, the low which it had made, and is currently quoting at 9,400. So which is probably around 1,400, 1,500 points kind of recovery that we have seen. On the other hand, the mid cap index was at the level of around 25,000 in the month of June when it made a low, and it's currently quoting at 30,800. So that clearly shows the kind of outperformance that we are seeing in from the mid cap space within the broader indices. Next question is from Mr. Deepak Meena. The sir Nifty bull run continue or not? So that is what we have showed through charts, Mr. Deepak, that we are anticipating that this move should continue, considering that the clues are favorable not only domestically but from the international markets also. So just to give you a reference, the US markets Dow Jones Industrial Average was hovering around 33,000, 33,300. That's a critical resistance area for that index, and we were very closely following the US markets when we were declining. So I'm hoping that once the US market witnesses further traction, so that would have a rub-off effect on the positive side as well, and we are going to see Nifty overcoming this 17,800 mark and inch toward 18,100. But before that, there could be some consolidation, because this is definitely a big resistance area, 17,800. But yeah, possibility of crossing this is definitely high this time. And I guess Mr. Gaurav Joshi, through this, I've answered your query as well. Can we see a breakthrough in Nifty 50? And so, Mr. Gopinath, we are not giving any recommendation in this webinar, so please excuse me on that front, because the idea is to share the insight, which all stocks which look good to us. And in case if you are associated with us as a client, definitely you can please reach to your representative, means your relationship manager, and they'll guide you accordingly. Okay, so support, as we have discussed, that in case if the market witnesses any profit taking, so we have two areas to look at. 17,450, that would act as a immediate support, and the next would be closer to around 17,150 in Nifty 50. Okay. Please, no stock specific question. And Jayesh Prasad ji have asked for iron ore sector outlook. So Mr. Prasad, I can just share my views on metal pack. So metal as a sector have done well, despite the challenges that we were hearing regarding the global slowdown and other things, and especially the metal stocks have recovered very strongly, and we are still seeing that recovery continuing across the board. Hindalco, VEDL, JSW Steel, Tata Steel. So I would rather be very selective in this space, because just in case if there will be any negative news from the global market, it might impact the metal pack first. So in case if you are having a view of short term, you should be very strict with your stop losses when it comes to the metal pack. Obviously, like in the other sector also, you should have strict stop losses, but in metal, obviously, kind of volatility with that when we see when the metal stock corrects is comparatively higher. Thank you, Mr. Joshi, for the feedback. See, Jagjeet Singh ji, which time frame that I should see? I am assuming that you are referring to the trading, intraday trading, maybe something on similar lines. So that is something which is different, and it's not the part of the webinar. Maybe hopefully in future we'll talk about how you should position your trades and the basics of technicals. In that we might cover, but there's no point like referring to something which is completely out of from this entire discussion. So please excuse for this time, but maybe in the future we'll definitely try to come up with a webinar on this. So, all right. So we have answered all the queries. So thank you everyone for joining in, and we are going to connect next time. Let me check. Yeah, next time we have the 18th. Yes. So sorry, 19th. We're going to connect next on 19th. So same time, 4 o'clock. Till then, goodbye. Take care. Thank you.